Are you ready for a big tax increase? Well, Joe Biden ran on a platform of increasing taxes for anybody that made over $400,000 per year. In this video, we're going to talk about those taxes and the other taxes that are coming down the pike in 2021. A lot of this wealth inequality in this country, in the United States anyway, is now having to deal with people aren't paying their fair share, right? If you remember, if you go back all the way to when we didn't have a tax in 1912, there wasn't an income tax. Yeah, there wasn't. We paid taxes on property taxes and sales taxes. And there were some taxes to pay for this small infrastructure the United States had back then. But there weren't gigantic income taxes that have been bandied around for the last 100 plus years. And so in 1913, they enacted the first income tax. And that was a 1% tax on anything over $100,000. Basically anything over $1 million today, you would have paid 1%. And so what they did is they soaked the rich back then. And, I don't know if you followed the economy back from 1913. There were some ups and downs during that period of time. What we've done is we've increased taxes. You can watch one of my other videos about what we do with taxes and how you can pay over 100% in taxes, at least in the United States, because taxes really never go down, right? They just kind of get sloshed around, and they might go down temporarily in one area, but somewhere else they're going to raise them. But anyway, a lot of the taxes are now talked about under the guise of everybody's got to pay their fair share. Well, what does that mean? Does that mean somebody sitting on the couch and collecting unemployment shouldn't have to pay anything, while somebody that's working 2 jobs and raising a family and making more money so they can support that family has to pay more? I don't know. I think most people would say, no, that's not fair. Like the guy sitting on the couch shouldn't get a break. And the mom maybe should, that's working the 2 jobs and raising the kids. And this $1.9 trillion COVID relief plan that just came in, the United States is on an asymptotic increase of amount of money that we're spending. And so we're going to have rampant inflation coming soon, which is a tax on everyone, especially the poor. And then we're going to have to pay for all this free money that we've been giving out, this helicopter money. And so we've got to pay our fair share. Well, in a progressive tax system, that means the wealthy people pay more. And so, that may be okay with a lot of people that the wealthy people pay more, but money goes where it's welcome. And when it's not welcome somewhere, that gets to a tipping point and all of a sudden it's gone and you can't tax them on anything. And so you've got to remember there's unintended consequences on any tax that we're talking about and any provision that's coming down the pike. So let's just kind of unpack this a little bit. So Biden ran on this concept that under $400,000 a year, you're not going to be affected. You won't be taxed. And then the White House came out with this little disclaimer last week and they said, well, that $400,000 threshold, and I quote, applies to families, not individuals. Consequently, individuals who make $200,000 could be affected if they're married to someone who also earns that same amount, for example. Interesting. So now it affects people making $200,000. Well, they're pretty rich. We need to get more money from them. The tax rate over the last few years was lowered down to 37%. Well, it's going to go back up to 39.6 under this plan for anybody making over $400,000 a year. Okay, that's one. Oh, there's not going to be any itemized deductions over $400,000. So if you make more than $400,000 a year, those people aren't going to get to write off the charitable contributions. They're also going to have to pay payroll taxes. Right now, they're capped in this year about $143,000. They don't have to pay tax for payroll over that amount. But if they get making under this provision, they're going to have to pay payroll taxes on that. Payroll taxes are about 13%, let's call it. Then they're going to come after those people who have invested, and those are called capital gains, those people that are investing in the economy, building businesses, building real estate, building development, making progress in our society. And they're going to tax them as ordinary income, which you just heard is 39.6% under this provision. So what do you think is going to happen to investment? Well, if people don't have the incentive to invest, the investment, at least in the short term for sure, is going to decline. Money goes where it's welcome. So maybe that development money will go to another country. Or they say, we'd love to have your money here. How about if you develop this property over here and we won't charge you anything on a capital gain. You just set up a foreign corporation. We'll just set it up here in this country. People are doing that already. Estate taxes, which were reduced, and the cap was, the ceiling was at 11.5 million, 11.7 million, I think. And at over 11.7 million, you paid a 40% tax rate. That was reduced, and now that's going to be increased up to 45%. And they're probably going to bring the threshold back down to where it was in 2009, which was $3.5 million. So any estate that you leave to your kids or to your charity is going to be taxed at $3.5 million and above at a 45% tax rate. I can tell you that the wealthy clients that I deal with don't really like this, and I think they're looking for alternatives. They're talking to me about alternatives, and I'm listening because there's a lot of them. The top 1% of earners are expected to see a 15.6% reduction in their after-tax income, and they're going to hike corporate taxes from 21%. They're going to raise that to 28% again. In France, I think it was about 10 years ago, France, which is one of the highest tax rates in the world, had a socialist government at the time, and they said, you know what, we're going to raise taxes on everybody. And I remember this one actor who was pretty famous at the time, Gerard Depardieu, and he said, you know what, I'm leaving. You're going to raise my taxes? I'm going to Russia, of all places. He went to Russia and got a lower tax rate in Russia than he was getting in France. It's coming to the United States. It's coming to any Western society. We've been blowing up this debt, and we have to pay for it, and they're going to come after people that are wealthy and can afford it. So a lot of my wealthy clients are asking, what do I do? Well, there's lots of solutions, and we work with you on those solutions. We like to play more offense and defense in the investments itself, but now our practice is starting to move to how do we protect our wealth? How do we look at other places that our wealth is welcome? How do we take advantage of other taxation systems that are more favorable to investors? That's happening now. It's the law of unintended consequences, and you need to know about it because it's coming for you. The $200,000 ceiling, or floor, I guess we'll call it, is going to come lower. They're going to start reaching into more pockets, and you're not going to like it. So you need to be prepared for it. That's all I got to say about taxes. So many of my students and clients come to me wanting to make sure they're doing the best that they can with their retirement savings. Some even come to me to learn how to live off of their investments so they can stop working now. This is why I created my Investors Mastermind group, where they can learn the exact strategies that I use in my hedge fund for creating income in the stock market. Click on the link in the description below to learn more, and click the subscribe button for more videos on growing wealth from your investments.